Hey guys, hope everybody's doing well. Today's Wednesday. We're back with our weekly options update video. Just want to throw a quick disclaimer out there. If you're watching these and you're copying these, just remember these options that I'm doing I've already done. I mean, they're not the same. You can't get the same option trade today or in the future. It's okay to get position ideas and then do your own due diligence, find out where you need to be and where you're comfortable with selling some of these. But I just wanted to throw that out there because I got an email, and a couple of people have messaged me saying, oh, I did this trade and I did that trade, and I get into some things that are probably not very good options trades. I'm not an options expert, and you'll see a couple of those here in the first couple of slides we go through. But I just wanted to throw that out there. I'm just sharing my experience, sharing with you what I'm doing, and sharing what I learned along the way as well, and the things that I'm trying. So I appreciate all you guys watching. Like, share, subscribe, do all that good stuff, and in full transparency as well. If you want to see more of my portfolio, check out my monthly income updates. What you'll see there is my core portfolio, and what you won't see there are these positions, because these positions I don't consider part of my core portfolio. The monthly income updates I consider my core holdings. So, though the options trades aren't shared there, the income is, but the options trades aren't shared there, and the core holdings aren't shared here. So I hope that makes sense. I'm not trying to, uh, you know, pull wool over anybody's eyes. I just trying to get you to understand the way I think about it, right? So, with that being said, let's get into it. So, how these work, first thing I do is I go over things that have been put on, or shares that have been put to me, things like that, things that I'm wheeling, stock that I'm holding, hopefully short term is what I'm, when stock gets put to me, I really hope it to be short term. Because if you realize the name of this channel is GW ETF channel, I really like to own my core in ETFs and not in individual stocks. So we'll just go through pretty much everything. Actually, first up, Viatris. I'm still holding on. I got two leaps that I bought back on July 8th. We're just holding on for Viatris. I think these leaps are good buys right now. I think you can probably pick them up probably for the same price that I'm in them at. Of course, do your due diligence. I'm not saying that leaps are for everybody, but I like them. I think Viatris here is undervalued, so that's why I'm buying a couple of leaps. So nothing's changed there. We're just waiting for the stock to turn around. Rocket, we don't have anything new on Rocket. I still have I have a couple of puts that expire July 30th at a 17 strike, and we're pretty much right there. We'll see with July 30th. 200 more shares could get put to me. I'd probably take them at 17, and then keep selling calls. Also on August 20th, I got another put down at $16. I'd probably take that one too. I like Rocket. It's been good to me. I mean, look at all this premium we've brought in. We brought in $882.61 in premium off Rocket since February 11th. Well, that's premium plus the special dividend, and I bought a leap as well. So even though we're down on the stock, I gotta update these prices. 1703 there. There we go. Even though we're down on the stock, we're still up considering all the premium and dividends. So we're still up almost 16% on the position. Next up is SoFi. Now, SoFi, I got, if you remember, I got assigned 300 shares of SoFi, and then I got assigned on July 16th another 100. So I have 400 shares total. at an average price of $18.25. On July 14th, I closed out 3 calls that I had on those original 300 shares, closed them out for 18 cents a piece, and kept $120 roughly. And then on Thursday, I want to say, was the 14th? Oh, Wednesday. On Wednesday, I sold 4 calls after I bought these back at an 18 strike for 50 cents out to August 13th. Collected 198.84 there. So I don't believe I have any other SoFi puts on. I was looking at putting more on, but I didn't. But right now, we're down on the stock again. Down $1,200 on the stock. I'd probably take another one, but I'm getting a little heavy on these individual stock holdings, so I'll probably slow up. My adjusted stock basis on SoFi is 16.29. So if I really want it out, I can get really aggressive on these calls and get out at a even. If I can get out even, I could do that and free up this cash. Next up is AHT. If you recall, this is the one that did the 10-to-1 reverse split. I do not have, Fidelity has not did all the accounting yet. There's some that are converted and then some that aren't. So I don't have any updates here. I want to update this adjusted price here because it's now 16.46. I'm probably down quite a bit on this because it's been under pressure. I did happen to there was on July 16th there was 5 put contracts that I got assigned, so those expired worthless, so there's the total profit there. And then on Wednesday I sold 5 contracts. I pre-sold those 5 contracts. Actually, no, I didn't pre-sell them. I can't do that because this is in a Roth IRA. I had 500 shares and I sold 5 calls at a $5 strike, collected 10 cents a piece on those. So those are still open. But I'll update. You'll have to wait till next week when Fidelity updates their numbers, and I'll update the spreadsheet. But I'm probably down 40 to 50% on this position. That's part of the reason why I gave that disclaimer in the beginning. When you're playing small cap stocks are almost infinitely more risky than large cap stocks. They're great when you can get right and get the premiums and all that stuff, but when things go wrong more often on in the small cap, micro cap arena than the large cap arena. That's just fact. It's just there's no denying that. So if you're going to play this small cap, you got to be prepared for some of these things like this. Next one is CVM. That's another one that's in the small cap arena. I got assigned 300 shares at a $10 strike. So profited that $99.42 from that premium. I pre-sold I got those assigned on July 16th, and on July 15th I sold the 3 call contracts at a $9 strike, collected 60 cents a piece. Commission was huge on that one. So right now we got an adjusted stock basis at 909, and I wouldn't mind letting it go at $9. That's just, if I can get out with a small loss, I wouldn't mind. And that's the small cap game. So we'll just go over to the new options tracker, and I'll show you what was opened since July 14th, and a couple of these were closed as well. And we'll talk about the spread. So July 14th, I sold a put contract on TAN. That's the solar ETF. Strike price is $75, collected $1.15, just one contract there. And here's those SoFi calls. Sold 4 of them at an 18 strike, 50 cents a piece on those. And then CCL, I bought a leap. I bought a leap on CCL at a $20 strike. Expires January 2023. Paid $5.80 for it. I just think Carnival, there's some risk here in Carnival Cruise. If we get another crazy shutdown, it could really put some pressure on CCL. But if we get back to cruising and people getting on ships, this thing will probably skyrocket. So I picked it up at 580. I almost added another one. I'm kind of kicking myself, but I didn't. So we'll just stick with the one and see how it goes. Also on Thursday, I sold Vizio, a put, just one contract, a 22.50 strike, collected 85 cents on that one. And there's those CVM calls on Thursday that I sold at a $9 strike, average of 60.7 cents for 4 contracts, that crazy commission at 503. And then I also sold a put on Monday on CCL as well. Did a 17 strike, collected 54 cents and only one contract. Probably should have done more. We see we close that out. We'll talk about that one. And then also SWBI, which is Smith & Wesson, sold a 22.50 strike, collected 75 cents on that one. Now, last up, today I did a index credit spread, and I did it on the NASDAQ. I could put the whole thing in here, but it's a lot. So I'll tell you what it is. I sold it today with an expiration date of July 30th. It was a put credit spread. I sold the strike price 14,225, and then I bought the 14,220. So that was a difference of $1. So you got $1 premium for the spread. Okay, I did one contract, and the commission on that was just wild. I'm gonna have to do another one and see if the commissions are really that high. Because if they are, I probably won't do them again. But that's another one I bought back today. So that was only about a 2-hour hold, and we'll go through that as we sort here through the close dates, and we'll check out the closings. So from 7:14 to 7:20, we closed out those SoFi calls. Profited $119.13 and a 6-day hold on that. And there's that AHT, those were assigned, so we kept all that premium of $371.56. And there's that one SoFi put that was assigned that we talked about earlier, kept all that premium at $59.36. And then there's those 3 CVM puts that were assigned, and we kept all that premium, $99.42. Now, I think it was Friday. I didn't do any closings, and I don't think I did on Thursday either. No. So everything else was done today. I closed out a bunch of stuff today, and that was just the market shot up today. So I'm really trying to prepare. Usually when we hit these big spike ups, especially after a bunch of down days like we've had, normally, or I shouldn't say normally, I should say there's more of a chance of a big down day the next day. So people running up stuff and then taking profits. So that'll put pressure on the downside. We'll see if I'm wrong. If I'm wrong, oh well. I've just created some room to take advantage of some stuff and reduce exposure. So closed out my Winnebago put that I had on, closed it at 28 cents, profited 36.58 for that one. Closed out my OSH, which is Oak Street Health, closed that one out for 80 cents, profited 44.58 for a 20-day hold. That Winnebago was a 22-day hold, by the way. That was about 30% profit or something like that. I wasn't looking for big profits here. I was just looking to clear some runway. Fizz, looks like I got 50% of the premium collected there. Closed that one out for 65 cents, so profited 64.58 in 18 days. My Campbell Soup, closed that out for 25 cents. Looks like I profited 50% on that one, so $50.36 for 8 days. And here's that CCL one that I just put on yesterday. Closed that out for 22 cents, so made a little over 50% on that one. $30.72 in one day. And then there's that NASDAQ credit spread, index credit spread that we closed out for 70 cents. So we closed it out for 30%, but ended up only keeping 26% because of these commissions. So there you have it. All the trades that I've done today. Oh, let's check out Premium Cooking. Premium Cooking, because I took a bunch of stuff off today, I'm back down under $3,000, so I only have $2,654 of Premium Cooking for the month of August, and I have one put left over for July for 144. So we closed out 10 positions from July 14th to July 20th, and collected profit of 902.06, and we opened 8 positions and collected premium of 864.98. And buying power used, I'm sitting at 33.7%, and that's about where I want to be. I can push it up to 40 if I wanted to, and be fine with that. But we'll see how it goes. If I'm wrong on the rug pull for tomorrow or today, if we're down today, then I'm right. If we're not down today, then I'm wrong, and I don't care either way. So there you have it, guys. Hope everybody have a great week in the market. Like, share, subscribe, do all that good stuff. Retire with Less series is coming this Saturday. That's a very popular series, my favorite series on this channel, and check it out. Be there, be square. You guys have a great rest of your week, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. These videos are for entertainment purposes only. Please seek any financial, tax, or legal advice from the appropriate professionals. Thank you.